What I adore about this channel is that it simplifies everything and make it very clear and easy to use. Okay, one of the dilemmas for the beginner traders or the old traders with um who cannot make profits yet is to understand technical analysis. So I tried in this video to make it simple as much as it could be, away from the complications of the technical indicators and theories like the ICT or SMC or these super shallow, complicated ideas. It's very simple, guys. It's very, very, very simple. You know what I think is the fundamental analysis is way complicated than technical analysis, but let's focus on the technical analysis. I made this technical analysis, made the technical analysis simplified, okay, as much as I can, so that everyone can understand it. And I have outlined it in 4 points only: supports and resistances, trend lines, patterns, and candlesticks. Okay, you can even merge trend lines and patterns in 1 point. So let's move to the live charts, any random chart, to see how can we apply this on the chart. All right, this is a very random chart, regardless. What is it? Is it a stock? Is it a currency pair? Is it whatever? Okay, bond, oil, gold, whatever. It's a chart and plain chart, and as you can see, no technical indicators are added here. But I will train you with the looks only how to use this chart. First, where are the support and resistance? Here's a support, here's a very strong resistance, possible resistance again. So we see here that the price went from the up to the down, stopped and reversed. Why did it stop here? One simple answer. I'm sure that if I went backwards, I will find another resistance here. Let's go back. Okay, let's change it. Okay, we found another support. Sorry, support, not resistance. We found that the price kept going down, down, down until the previous support. Then what did it do? It reversed. Said, okay, it's the right time to reverse and go upwards. Now the price went upwards. If it crossed over the previous uh, resistance here, it's possibly that it's going to go to higher and higher levels. So do you see how much it's easy and simple? If the price went smoothly through this resistance, it's a good sign that the price is going to go higher and higher. But we have to see the price went up a little bit and closed higher. Let's say here. So if the price went up today or tomorrow and closed here way higher than the previous resistance level, it's the green light for going for buying. It's going to go parabolic. Okay, so as we can see that the price was very choppy here. So what else can I see here in this chart? So if I see here at a rising trend, okay, is it forming any kind of pattern or trend lines? Yes, a possible trend line here. Okay, there's a trend line here. All right, and I can draw another one here. But there is something else much more interesting other than that. Let's see. All right, another trend line up there, and both of them are forming an expanding wedge. All right, expanding wedge, expanding rising wedge, expanding rising wedge. This is a pattern. The pattern insinuates that the price will at some point goes downwards. So what do I see from this point? This is the previous support here, and the price went till the top of the resistance. We are in front of two possibilities: either the price to go higher and higher and break the previous resistance and stops there for a while, or the price stops from this point and starts to go down. While at the very critical point, you can't start trade from this point. You have to wait to see whether if the expanding wedge going to be continued, or the price is going to break the previous resistance and disrupt this wedge. Okay, so you have from this point, I'm going to advise you not to enter and wait to see what's going to happen. What else in this chart? If we backed up a little bit, let's look at this area here. This is a line, right? And this is another trend line. Both of them forms a symmetric triangle. A symmetric triangle is the price may many people will tell you that the symmetric triangle is a continuation, but I'm telling you according to my experience, no, not necessarily. You have to wait until the price breaks from one of the two sides, either from here or from there, and then we will talk. Uh, Especially that this triangle was preceded with sideways with a little bit bullishness. So you may consider this is a bullish trend. This is a bearish trend. I don't know. It's not clear. Way you can I can tell you that this is a sideways trend. It's not very clear whether if it's bearish or bullish, but the once the price has broken the lower band of the triangle, it went parabolic. Okay, you see how easy is it to understand the charts. So here we have expanding triangle. We are measuring the two supports, two resistance. If it broke, if it closed higher, then the price is going to go higher. If it went lower, the price may go lower because it's forming an expanding triangle. Once it breaks the lower band here, this is going to be parabolic to the downside. You may play with it a little bit. You may adjust it to bring this here and do it there. This is shrinks the probabilities a little bit. You may also draw a line here from this point. This is a minor trend line. Okay, if the price broke under it, it's going to go lower to the lower uh, trend line. Okay, and here don't forget that the price get after the triangle, the price went down to the previous support level. This was a very great trade. I didn't miss it. I took it. Okay, let's see what do we have here. Okay, also we have, you can say this is a trend line here. Sometimes when it's very hard to, but this is I will tell you, this trend line is a little bit failure because the price went broke under it, but it didn't go lower and it moved sideways a little bit. You may change this by the way to line chart. All right, let's okay, this wasn't very fruitful or helpful trend line, or at least the one who sold here might have shortened here, might have stopped the trade here with a small profit. What else do we have? Okay, by the way, the candlesticks is very helpful also in analyzing. Um, this is a doji star, for instance. Okay, so The Doji star is a neutral, yet it's helpful in analyzing. So if the following candle has closed higher than the high of the star, this means that the price is reversing upwards. If this candle has closed under the low of the star, this was going to be a sign that the price was going to go lower. So as we see here, the price closed higher. Okay, let's go to different chart. Okay, the euro dollar. Okay, coincidentally, we have a trend here, very clear trend. Okay, this trend, once the price has broken this trend, the price was moving down. I drew a trend line here. Once the price has broken the trend line, it went upwards very clearly and kept going up. Let's draw another. Okay, I can see another trend line here, possible trend line. Let's draw a trend line from this point. So, all right, this is another trend line here. Let me keep both trend line, everything. I'm going to draw it. I'm going to leave it. This is another trend line here. The price is dancing over this line, hitting it several times, respecting the line. Once it breaks under it, it retested the line and it went lower. From this point, I'm expecting the price. For me, at this point, I was going to sell. Okay, the price went up to retest the line and went down again. I believe the price is going to form waves falling down. All right, simple. It's not complicated at all. A bearish trend line also here. Okay, lower highs and lower lows, one, and started from here to bounce two equal lows, and once it breaks the line, it went parabolic, as you can see, very fast. Sometimes it pauses here, no problem with that. By the way, this is what's called Elliott waves. 1, 2, 3, 4, 5. It's one of the patterns. Elliott wave said that after 5 waves, 1, 2, 3, 4, 5, condition the price is going to reverse, and condition that number 3 can't be the shortest, and wave 4 can't overlap with wave 1, and sorry, wave 4 can't overlap with wave 1, and wave 2 can't overlap with the beginning of wave 1. So this is Elliott wave here, 5 waves upwards and 3 waves downwards. All right. You have to read about it. It has a lot of details, but this is simply it. If you don't want to go in details for something like Elliott waves, don't concern yourself. Just draw a trend line, and it's going to work with you. Let's go randomly to any other chart. Let's go to USD Loonie, USD CAD. All right, what do we have here? Sometimes when you have a chart that gives you nothing, try to play with the chart. Change this to um, line chart, for instance, no problem at all. Sometimes it's very helpful. Right, here's a great example. Trend line. Once the trend line was broken, it went parabolic downwards. This is your entry point. Don't be greedy and try to catch a falling knife by entering here, because Never, you most of the time you don't know when it's going to reverse. So this was very good example. I hope I can find something like, okay, here's simply that double bottom, then the price reverse. Very easy to find, to spot the double bottoms and tops, and the head and shoulders in the line chart. It's way easier. What else do we have? So it's very simple strategy to follow. All right, if you are not so sophisticated in technicals, draw a trend line and wait for it. Spot the double bottoms and tops through the line chart, and it will go very smoothly. Here's a double bottom, very simple to spot. Okay, and the price was going down, double bottom, then it reversed. And guys, don't forget to okay, I'll tell you a great secret here. Risk management is the name of the game. If you didn't forget to place stop losses uh, with each and every trade, you are going to survive, and you are going to be an adequate trader. Then you are going to be profitable trader. So you have to place stop losses. You have to know where you are going to place your stops on each and every trade. Otherwise, don't enter the trade, or you are going to be stopped, or you're going to be liquidated, bankrupt, and the market is going to kick you out of the playground. So don't enter a trade without placing your stop. And I'm going to explain the stop loss and risk management in a different video. All right, this is okay. We have some kind of trend line. Let's go to the candles because it's not clear here. Okay, this is let's draw. I want to draw a line here. Okay, this was a trend line. The price went very high. It broke it, but yet it didn't go lower. It kept moving sideways. So every once in a while, you have to learn that you are going to have loser traders. That's why I'm telling you, you should have your stop loss. Here you have the one who shortened from this point hasn't lost any money because the price simply moved sideways. Uh, uh, but you have to be prepared for the losses because sooner or later you are going to face a stop every once in a while. All right, here's another. Let's go back to the line chart. Draw a trend line here. Once it break it, it go lower, lower and lower. Okay, or you can draw the line like that, and once it breaks it, you have even better results. You may also draw a line like that. Then once the price breaks it, it went parabolic, as you can see it. Very simple, guys. Very simple. All right. Remember, as the Wolf of Wall Street, Jordan Belfort told you, keep it simple. Okay. That's it. That's the general idea. I told you that it's very, very, very simple. Supports and resistance are used to place take profit and stop loss. Okay, and or to predict the next stop of the price. If the price crossed over the previous resistance or the previous or under the previous support, like what happened here, the price here didn't stop, but stopped here for a while at the previous support, went up a little bit, then went lower. This is a great chance to sell from this point. Assume you are working on a daily or a weekly or a monthly chart. This was going to be a great chance to make some profits. Trend lines, patterns, something like triangles, wedges, double tops and bottoms, head and shoulders. These patterns are very important, and trend lines. And finally, candlesticks. That's it. Make it simple, guys. This is my motto. Make it simple. Don't overcomplicate it with indicators. Indicators are important, by the way, yet it's for more sophisticated traders, and it's not as easy as it seems. It's built on mathematical equations, so it's much more advanced tools. I may make a video, some videos on some technical indicators, explaining some of them. And that's the whole idea. Make it simple. It's as an easy as that. If you follow these advices, literally, you will be a successful trader. And remember, the name of the game is risk management. Don't forget to subscribe because I have a very interesting video I'm planning for coming next. Don't miss it and subscribe. Thank you very much.